Hi everyone, Logan Hertz here with Hazeltine LLC. The following presentation comes from a speculative investment newsletter that I founded and ran successfully, but have since winded down. I'm still open to conversations about these sorts of things. I always find it interesting. And I always start with foundations and financial philosophy and an overall framework so that we can fit each of these various components into your overall framework. Because unfortunately, I think most people focus narrowly on investments as if that's the only piece of your financial strategy. They don't really understand how all the other components fit in. They don't have an overall framework. But this is a speculative investment newsletter that did very well, but I eventually closed it down and am now focused more on the infinite banking concept. And I like focusing on that because it's a guaranteed asset. We can never have a down year. There will never be any losses. My investment newsletter did phenomenally well, partly due to timing. I started it up in the wake of COVID, and in the wake of COVID, pretty much any asset you invested in did extremely well. So I was really trying to caution our subscribers that this sort of phenomenal performance shouldn't be expected every year, but we did extremely well. So I thought this would be somewhat educational to give you a bit more principles on how you should approach speculative investments. And why is this important? Because we have to classify parts of our financial structure properly. And most people are putting most of their free cash flow into speculative investment vehicles. And I don't particularly think that's a good idea. Even if you're a very good professional speculative investor, in fact, very professional speculative investors probably invest much smaller percentages of their free cash flow into speculative investment vehicles than the average person does. So I hope this will be helpful and educational. We'll talk standard disclaimer. This deck is for informational purposes only. Nothing in here should be taken as investment, legal, or tax advice. This presentation is about our investment newsletter, and I'm calling it a crypto investment newsletter, even though it's much more comprehensive because I've learned that crypto investment newsletter is the right marketing term. And to be fair, a lot of our best performance is coming from crypto. And if you're not interested at all in crypto, then it's probably not a good fit for you, even though it is a comprehensive newsletter. In fact, I don't even like the word crypto. I prefer to use the phrase blockchain technology because most people understand investing in technology. But if you look at cryptos as money, then it's a little different. But okay, what makes our investment newsletter different? There are three main differentiators. The first is we give you real, immediate results, not hypothetical future results. So your standard financial advisor or investment newsletter may be very smart and have lots of great ideas, but everything he's going to give you is going to be based on hypothetical future results. Maybe the market does well, maybe it doesn't. Maybe his investment thesis works out, maybe it doesn't. But we start by giving you immediate, concrete results. We have ideas that will help you generate immediate cash flow and double digit returns without being exposed to market risk. So, some examples. I can show you a simple method I myself have used for over 3 years that provides over $300 a month in additional income. I can show you little known savings vehicles where you can get paid double digit interest on your cash. We all have seen how the Federal Reserve has pushed interest rates down to historically low levels. But the Federal Reserve is not omnipotent. They cannot overcome economic laws any more than they can reverse the law of gravity. So when the Federal Reserve pushes interest rates down, it's like pushing a volleyball underwater. It just pops up somewhere else with greater force if you know where to look. And I do. So again, get paid double-digit interest on your cash as simple as depositing it into the right savings account. Don't worry about market risk. And I can show you a cash flow vehicle the rich use to provide tax-free retirement income, contractually guaranteed. We're not telling you to put your money into some investment and hope that the thesis works out and you get a nice return. We're giving you immediate, concrete results. So you don't have to believe in my credibility. You don't have to believe in any investment thesis at all. You don't have to believe anything about what the market will do. Believe in the $300 a month in additional income you're getting. believe in the 12% interest you're getting paid on your cash without taking on market risk. So that's the first differentiator. We give you real, immediate, concrete results, not hypothetical future results. The second differentiator is we get you into rich man's vehicles. We don't want to imitate what your average person is doing because your average person does not get rich. What are rich people doing? I want to imitate what they are doing and how they became successful. And as we all know, there seem to be two different fields of play. One for the average person who gets stuck with investment vehicles which are not life-changing, let's say. And in the rich man's playground, where he gets investment vehicles that can really generate amazing returns. We help you get into rich man's vehicles. The problem is that the average person is oftentimes locked out of these rich man's vehicles for various reasons. There can be all kinds of barriers in place. We help you get around those walls so you can invest alongside the rich. To give you one example, there's a particular asset class where ultra high net worth individuals put on average 2% of their net worth, and it can require a minimum investment of $200,000 or more, which effectively locks out the average investor. But I've found a way to get you into this asset class for as little as $50. This asset class has outperformed U.S. equities, fixed income, and real estate. It has extremely low volatility. It's not correlated to the stock market. Based on historical performance, you can expect to double your investment every 6 years. And from 2007 to 2017, this asset class returned 334%. Now notice, included in that time frame is the 2008 financial crash. Rich man's assets are not exposed to market risk. You wouldn't have even noticed it if you were invested in this rich man's asset. If you invested in mutual funds, you certainly would have noticed the 2008 financial crash. It was devastating to a lot of people. This is the second differentiator. We are getting you into rich man's vehicles. We are getting you around the walls that keep you out of the rich man's playground so you can invest in assets that have tremendous returns and are not correlated with the stock market. And the last differentiator we have is speculation. In my other presentations, I'm careful to distinguish investing from speculate. We start with safe investments that give you cash flow without being exposed to market risk. As we talked about before, just put your money into a savings account and earn 12% interest. Why put your money into mutual funds and hope for a 12% return when you can get it without being exposed to market risk, just staying straight up in cash? We always make that distinction. But I don't want you to think that I'm poo-pooing intelligent speculation. I do believe there is a place in everyone's portfolio for intelligent, disciplined speculation. If you had bought Microsoft, Apple, Google, take your pick, when they were cheap, you certainly could have made a lot of money. So I'm not poo-pooing intelligent speculation. I just think it's important that we define our terms properly. And when we speculate, we use rational position sizing, and we're expecting risk and volatility. I believe there has never been a better time to be an intelligent speculator than right now, because the market has never been more distorted than it is right now, which is fantastic for us as speculators. And here we are shooting for life-changing gains. And most of these gains we're seeing are in cryptocurrencies, which are minting new millionaires all the time. And I want you to be able to participate in this fantastic burgeoning field. So here are some actual results we've achieved. A 9,100% return on a small resource stock, and over a 13,000% return on a disruptive tech play. That's enough to turn $1,000 into $135,000 or $10,000 into $1.35 million. So I don't want to put my hard-earned money at risk and hope for a 12% return in mutual funds or the stock market. But I do think it makes sense to take small, disciplined position sizes where we're shooting for the chance to make life-changing financial gains, thousands of percent returns. That risk-reward scenario makes sense to me. So how do we do this? How do we generate these life-changing gains via intelligent speculation? The first thing is you have to be disciplined with your position sizes. Do not get greedy. People don't go broke out of fear. They go broke out of greed. And if you have your safe base set up in ways that we can show you, you can safely speculate without risking the farm. We're going to use small, uniform, disciplined position sizing. Let's say we have $5,000 that we've allocated for speculation. We're going to put $1,000 each into 5 different speculative investments. Then let's say the worst happens and 4 of those investments go to zero. So we're sitting on a $4,000 loss on our original $5,000 investment. We've got an 80% loss rate. But the remaining position goes up 7,400%. This is a real example based on real numbers. Now, on that one position, we have $74,000. After we subtract out our $4,000 loss, we're still sitting on $70,000 from our original $5,000 investment with only a 20% win rate. This is what we do. We imitate venture capital firms. We take the venture capital approach to cryptocurrencies. There are others as well, but cryptos, it's where we're getting most of our performance right now. Venture capital firms will take their money and put it into, say, 10 different pre-IPO companies. And if even one of those companies takes off and goes public, the gains are so enormous that it makes up for all the losers. You only need one or two of your positions to succeed in order to easily make up for all your losers and leave yourself with a huge profit afterwards. So we imitate venture capital here. That's the power of intelligent speculation and asymmetric risk. We risk a little to win a lot. But you've got to choose intelligently, you've got to use disciplined position sizing, and you've got to have the patience to hold through extreme volatility. I don't want you to think it's a straight path up to a 7,000% gain. It is not. It's a very bumpy ride, and you've got to make sure you have the discipline to hold through all that volatility. So how do we pick these winners? What's our framework for picking the right speculative investments? The first thing we do is we look for an unstoppable long-term trend. And this right here separates us from 95% of investors out there. Most people look for the right investment. That's the wrong way to approach this. We don't look for the investment first. We look for the trend first. What is the long-term, unstoppable trend that we can ride? The trend is your friend, and a rising tide lifts all boats. As an example, in the 1990s, the long-term trend to ride was the internet. Once you understand what the internet is, you know it's real, you know it's transformative, and it's going to be here to stay. Decades later, it's still growing. So if you invested in internet-related stocks in the 1990s, even if you weren't the best stock picker, you would have done very well. And if you were a good stock picker and you had picked companies like Microsoft, that's the sort of company you can hold forever, and you've done unbelievably well by holding it. So that's the first thing. We look for an unstoppable long-term trend. We start with the big picture first. Then we look for a good entry point where prices are reasonably attractive, and then we find best-in-breed companies or investments playing that particular trend. And then lastly, we must have the patience and discipline to hold through this. I'm borrowing from Marin Katusa, who's a legendary speculator who made lots of money in the natural resource business. He uses the analogy of the alligator. We want to be an apex predator like the alligator. Now, what does the alligator do? Most of the time, nothing. He just sits there lying in wait. It's only when a nice juicy prey comes along that he suddenly springs into action. We do the same thing. I don't want you to think that we're going to be sending you a new speculative idea every week. That's not the way this works. It's going to be a very small number of very high potential speculations that we simply sit on. And sitting and doing nothing is a lot harder than it sounds when there's so much noise out there and so much potential volatility out there. But that's what you've got to do. You've got to have the patience and discipline to simply hold your positions while they go up and down, while the market goes up and down, until your investment thesis plays out. Anything that goes into our model speculative portfolio, we're looking for at least 10x potential over the next 3 to 5 years. Let's look at some examples of winners. So an unstoppable long-term trend. How about cannabis legalization? That's been going on for years. It's going to continue to go on apace. A good entry point. So in 2019, the cannabis sector got beaten down for no good reason, and good companies as well as bad were on the cheap. This is not an investment recommendation, just to be clear, but as an example, Hexo is both the name of the company and the stock ticker. Here is the chart of Hexo. We added it at $1.92 and wrote it up to over $11. That's a 575% gain in 9 months, in less than a year. So if you had invested $1,000, that turned into nearly $6,000. And if you had invested $10,000, that turned into nearly $60,000 in less than a year. Let's look at one more example. During a precious metals bull market, gold does well, silver does better, and carefully chosen silver stocks can perform spectacularly. This is the chart for Silvercrest Mines, ticker symbol SILV. Again, not an investment recommendation. We added it at 14 cents and wrote it up to nearly $13. That's over a 9,100% gain. If you had put in $1,000, that turned into over $90,000. If you had put in $10,000, that turned into over $900,000. And if you had put in $100,000, that turned into over $9 million. I'm using stocks here as examples, and we do have some stocks from time to time in the model portfolio. But for the most part, we are investing outside of the Wall Street matrix. We want to be a big fish in a small pond, and we want to get into these investments before the big institutional money gets there and really moves the market. And to do that, we're typically investing outside of the stock market. But I think these are good examples. All the performance is publicly verifiable. People can get their heads around it, etc. But typically, our biggest gains are coming in cryptocurrencies and private placements. So those are pre-IPO deals that are open to the average person if you know where to look. Most people think you have to be venture capital or one of the big boys to get in pre-IPO. It's actually not true if you know how to do it. And now I want to share with you my number one speculative trend that I am super excited about for the future, that we have a handful of very high potential speculations riding in our portfolio. This is going to be the internet. What the internet did to the economy is what this trend is going to do to the financial sector, and we are in the first inning. The gains here are going to be unbelievably life-changing. I'm going to give you an example of how an actual investment in this market performed that you could have invested in. This is the chart for an actual investment in this sector. You could have bought it at $34.53 and ridden it up to nearly $34,000. That's nearly a 100,000% gain. Now, how long did it take to make this move? 45 days. In less than 2 months, you could have made unbelievably life-changing gains. If you had put in $1,000, this turned into nearly $1 million in less than 2 months. If you had put in $10,000, this turned into nearly $10 million in less than 2 months. And if you had put in $100,000, this turned into nearly $100 million in less than 2 months. So the purpose of this chart is, yes, get excited because the gains here are going to be phenomenal. However, I also always urge my subscribers to keep your position sizes small and rational. You don't have to bet a lot of money. Do not risk your current lifestyle for the hope of a future better lifestyle. Because even though the gains can be life-changing, there's a lot of volatility along the way. I can think of one in particular. For the first year or so, we were down 80%, or it skyrocketed thousands of percent higher. If you're worried about how your investments are performing, then you've got too much invested. Don't put in more than you can afford to lose, because even if they do well, the volatility until we get there can be so extreme that you might get shaken out of your position if you got too much invested. You don't want to do that. Here, you only had to put in a $1,000 investment to realize life-changing gains. Like the internet, it's inevitable. It's coming. Whether the powers that be like it or not, it is going to be absolutely transformative. And the gains here are going to be absolutely life-changing. And I want you to be able to get in on it and change your financial future. So I'm super excited about this trend. This is the number one trend in my model portfolio, although there are others we are following. And I really want you to get in because we're just at the ground floor now, and this is going to be breathtaking. So I hope you found that interesting. That was the sales presentation for my speculative investment newsletter, which I no longer have running, but I'm always open to conversations if you want to learn a little bit more. Of course, I don't give investment advice, but we can certainly have conversations and talk about it. And the trend that I was presenting there, of course, I cannot give it to you, although I used to, but it certainly turned out to be the case. That trend is still going on, by the way, and we're still very much in the early innings of it. When I first published that newsletter, we were probably in the first inning of that trend. We're probably now in the second, maybe the third inning, but it's still very, very, very early. So that trend is still going on. But I hope this was helpful, just showing you my overall financial philosophy and how it might apply to different areas of your financial life, and hopefully giving you a different perspective, a different way of thinking that is not what your standard financial advisor will give you, that is not in the standard Wall Street paradigm, and is more like what professional speculative investors do in venture capital firms. So I hope this was helpful. We'll talk soon. Bye bye.